Hey everyone, welcome back. Ready for another deep dive.
Absolutely, always up for a deep dive.
This time, we're taking you into the world of trading and market psychology with this book, The Art and Science of Technical Analysis.
Sounds pretty specific.
It does, right? But here's the thing.
Yeah.
Even if you're not planning to play the stock market anytime soon, this book is seriously eye-opening when it comes to understanding human behavior, like how we make decisions, especially under pressure.
I'm intrigued. I've always found it fascinating how much psychology plays into, well, everything, really.
Exactly. And this book just nails it. One concept that really jumped out at me was expected value. Basically, it's this idea that it's not just about winning or losing, but about the size of those wins and losses over time.
Oh, I see. So it's like a small chance of a huge win versus a high chance of a small loss.
You got it. And the book gives this example of a 10.1 reward/risk trade. Sounds amazing, right? 10 times your money.
Right. Who wouldn't want that?
But here's the catch. Even with those odds, if your win rate is super low, you could still end up breaking even in the long run.
Whoa, that's kind of mind-blowing. It's like that saying, high risk, high reward. But this flips the script. It's more like, even with high reward, if the risk is miscalculated, you might not actually be winning.
Exactly. It's about looking at the bigger picture. And this applies to way more than just trading. It makes you think about all those times you might be chasing a big win in life without really considering the odds.
So true, like starting a business or even just choosing a career path. You see those success stories, those outliers, and you think, that could be me.
Totally.
Yeah.
But this book really challenges you to think about those base rates, those probabilities.
Right, so it's not just about dreaming big, it's about making smart bets.
Exactly. Okay, so we've got expected value, which is already blowing my mind.
Tell me about it.
But then there's this whole other concept, the Wyckoff Market Cycle. It sounds super technical, but it's basically this model for understanding how markets move in cycles. And get this.
What's that?
The book talks about how these patterns have been around forever. Like they even found evidence of them in ancient markets.
Get out of here.
Seriously.
Right.
They give this example of Phoenician merchants using similar strategies to manipulate markets like way back in the day.
Wow, some things never change, huh?
Right, like human nature is human nature no matter the century. So basically, this Wyckoff cycle breaks down market movement into 4 stages: accumulation, markup, distribution, and markdown. And it all revolves around how these big institutional investors, the so-called smart money, operate.
Smart money versus everyone else. Okay, now it sounds like we're getting into a Wall Street thriller.
Right. But seriously, it's fascinating stuff. So imagine this. The smart money is quietly buying up an asset when it's undervalued during that accumulation phase.
Sneaky. So they're like playing the long game, not trying to tip their hand too early.
Exactly. They don't want to scare off other buyers and drive the price up too soon. Then comes the markup phase.
So that's when the price starts going up.
You got it. As the smart money keeps buying, demand goes up, and so does the price. And this is where it gets really interesting.
I'm on the edge of my seat.
Because that's when other investors, seeing the price rise, start to think, oh man, I don't want to miss out.
Classic FOMO, fear of missing out.
Exactly. And that just fuels the upward trend even more, pushing the price even higher.
Wow, so the smart money is playing everyone like a fiddle.
Well, that's where the next phase comes in. Distribution. So the smart money, knowing this upward trend, can't last forever.
Right, what goes up must come down.
They start to quietly sell off their positions, unloading those assets at those inflated prices.
Whoa, so they're cashing in while everyone else is still caught up in the hype. That's kind of brilliant.
It is, and kind of ruthless, right?
For sure.
Yeah.
But what happens to all those people who bought in at the peak when the smart money was selling?
Well, that's where the final stage comes in, markdown. With less demand and more supply, the price starts to fall.
Ouch. And I'm guessing that's when panic sets in.
You nailed it. People see the price dropping and they start selling off their assets, afraid of losing even more money. And that just creates even more downward pressure, leading to a bigger crash.
So it's like a self-fulfilling prophecy driven by fear and herd mentality.
Exactly. And that's the Wyckoff Market Cycle in a nutshell.
Wow. I can already see how understanding this cycle could be helpful even outside of trading.
Yeah.
It's like this framework for recognizing patterns of behavior, like in business negotiations or even personal relationships.
Right. It's all about understanding how information, timing, and psychology all intersect to influence outcomes. So we've explored this idea of market cycles, right? And how the smart money operates. But this book doesn't just stop there. It goes into specific trading strategies. And this is where it gets really interesting, even for someone like me who's not a trader.
Oh, I agree. It's like once you see these patterns, you start to see them everywhere.
Right. It's like it rewires your brain a little bit.
Totally.
Okay, so the book breaks down trading into 4 basic types: trend continuation, trend termination, support holding, and support failing. What jumped out at you with those?
Honestly, it was how these ideas go beyond trading. It's like we make these same kinds of decisions in our own lives all the time, just maybe not with stock charts in front of us.
Okay, I'm hooked. Break it down for me. Let's start with support and resistance. What are those and how do they play into these trading types?
So imagine support like a safety net in the market. It's that price level where enough people are like, okay, this stock is a bargain here, I'm buying.
So it's like a floor for how low the price can go.
Exactly. People are ready to buy in before it drops any further. And then you have resistance, which is kind of the opposite.
So that's like the ceiling.
You got it. It's where enough sellers are like, nope, this price is too high, time to sell. And that keeps the price from going up any further.
Got it. Support is the floor, resistance is the ceiling.
Exactly.
But what do support holding and support failing trades look like?
Support holding is kind of like when you're working towards a goal and you hit a roadblock, but you've got a strong support system.
Okay, so your friends, family, mentors, that kind of thing.
Yeah, exactly. They're like that support level that keeps you going. You trust that you've got what it takes to push through because of that support.
So it's about trusting that the support will hold.
Exactly. Now, support failing is a bit more, well...
Ouch. All right.
Yeah. It's like, imagine that same situation, but this time your support system isn't there for you. Or maybe it's not strong enough. And you start to doubt yourself, lose momentum.
That's a good way to put it. So connecting this back to trading, I'm guessing support failing is when that price drops below the support level and keeps going down.
Exactly. It's like buyers aren't stepping in to support the price anymore.
So it can be a scary situation in trading, just like it can be in life when you feel that lack of support.
Okay, what about these trend trades? Trend continuation and trend termination. Those sound scary.
They can be, but think of it like riding a wave.
Okay, I like where this is going.
So trend continuation is like catching that wave early and riding it as long as you can.
You're going with the flow, basically.
Right.
But with a strategy.
Exactly. You're not just blindly following. You're looking for those moments where you can buy in or sell out strategically to ride that wave.
Okay, that makes sense. So trend termination would be...
knowing when to jump off the wave before it crashes.
Because all waves eventually crash, right?
Right. And trend termination is all about spotting those subtle signs that the momentum is shifting and getting out before it's too late. So it's about recognizing that what goes up must come down.
Exactly. And that's where things can get tricky. It's about being able to tell the difference between a little dip in the trend and the start of a full-blown reversal.
And just like in life, timing is everything.
Exactly.
So we're talking about riding waves, spotting those turning points. It's making me think about how in life, we often get caught up in chasing every opportunity that comes our way, you know? Like we're so busy trying to do it all. This book really emphasizes finding your own rhythm, your own approach, rather than getting overwhelmed trying to do everything.
That's such a good point. And it's something the book really drives home. This idea of finding a trading style that matches your personality.
Okay, tell me more about these trading personalities. Are there really different types of traders?
Oh, absolutely. Just like with anything else, there are different approaches. Some traders are all about those short-term, fast-paced strategies.
Was they're like the adrenaline junkies of the trading world.
Exactly. They live for the volatility, always hunting for those quick wins. And then you've got the more, shall we say, patient traders.
Oh, long game players.
Exactly. They're more risk-averse, prefer those long-term investments where they can just ride out the ups and downs of the market.
Interesting. So it's like some people are sprinters and some are marathon runners. They're both in the race, but with totally different strategies.
I like that analogy. It's about knowing your strengths and your risk tolerance.
Right. Because if you're a marathon runner trying to sprint, you're going to have a bad time. So how do you figure out which trading personality you are? Or even just in life, how do you find that decision-making style that works best for you?
Well, the book stresses self-awareness big time. Knowing your strengths, but also your weaknesses. Like, are you comfortable making quick decisions with limited information? Or do you need time to process, analyze everything before you make a move?
That's a good question. I know I can be a bit impulsive sometimes, jumping into things without thinking them through. So maybe I'm not cut out for the fast-paced trading world.
Maybe not. But hey, there's a style for everyone. The important thing is finding what works for you and sticking to it. Which actually reminds me of another big takeaway from the book, this idea of shiny object syndrome.
Oh, I know that one all too well. Always chasing the next exciting thing.
Exactly. And the book talks about how, in trading, that can be a recipe for disaster. You're constantly jumping from one hot stock to the next, never really mastering any one strategy.
So it's about focusing on quality over quantity.
Exactly. Finding a few key strategies that resonate with you, that fit your trading personality, and really honing those skills.
Don't get distracted by all the shiny objects. That's good advice for life in general. You know, one thing that really struck me about this book is how much emphasis it puts on data and analysis.
It's not just about gut feelings, is it?
Right. It's about looking at the numbers, understanding the historical trends, not letting emotions cloud your judgment.
Which is tough, because our brains are wired to see patterns even when they're not really there.
It's true. We're always trying to make sense of the world, connect the dots.
Exactly.
Yeah.
But in trading, sometimes those connections are just our brains playing tricks on us.
So how do you avoid those pitfalls? How do you separate the real patterns from the illusions?
That's where that data-driven approach comes in.
Yeah.
It's about being aware of your own biases. Like, are you seeing a pattern because it's really there or because you want to see it?
So it's about being honest with yourself and questioning your assumptions.
Exactly. And being open to changing your mind when the data tells you you're wrong.
Which is never easy.
Never easy, but always worth it in the long run.
You know, I have to say, I'm really glad we took this deep dive. I went in thinking this was just going to be about technical analysis, and it turned into this whole exploration of human psychology and decision making.
I know, right? Who knew Wall Street could be so philosophical?
Seriously. It just goes to show there are valuable lessons to be learned everywhere, even in the most unexpected places. And on that note, we'll wrap up this deep dive into the art and science of technical analysis.
Thanks for joining us.
We'll see you next time for another deep dive into a whole new world of fascinating ideas. Until then, keep those minds curious, and as always, thanks for listening.